All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Daryl Martin, here on TFNN.com, coming to you live each day with live trader commentary at TFNN.com or Tiger TV, also on your mobile phone at TFNN.mobi. And, of course, you can check out us live inside the eSignal platform as well. Well, let's check out where the markets are at right now. We got the S&P is up 4.5 points. We got the Russell up 5.5 right now. NASDAQ is up 26. We'll get on over at the Dow. It's currently down 67 points, and copper is down 0.5%. Gold's currently up 0.5%, with silver up 0.25%. Oil is pretty flat on the day. It's up a couple ticks at the moment from settlement, but had some decent volatility along the way. We'll get on at our ag markets. We've got natural gas also, which is down big. Down 2.5%. This seems so quiet today besides natural gas there on those indices, right? We got corn right now. Corn is down just a couple points. We got soybeans down 10 points. The pound dollar is currently up 74 points on the day. We got the euro pound is down 12. The U.S. franc is down 38. And the US yen is down 10. Euro yen currently up 24, with the Aussie yen up 32, and the Aussie dollar up 42. Bonds currently pretty flat on the day. Dollar index a little bit negative, but not too much at the moment. And the euro dollar is up 33 pips. Let's do some quick reviews. And let's see here. Looking on over at the Aussie dollar, we got some decent MVP moves right there, some breakouts, just not massive moves, just sort of little smooth oscillations, enough for you to sort of grab some decent trades. It moves up, hits the deviation level, goes on back down, and keep trading it there. Looking on over at the euro yen, and the same thing last night. Could have hopped on in on euro yen, went on up, got a long MVP, hit one deviation, actually went on to another one, and then finally turned back around. Hadn't quite hit settlement yet, but or didn't as of 4 a.m. there. Going in, looking at the euro dollar. And euro dollar, we got some nice moves last night. Moved on up a little bit, and then had a nice punch right down there around 3 a.m. So just came right on down, just shy of settlement before popping on back up and down to below settlement, down to negative 0.5. We got the pound yen. In the evening last night, I had a nice little smooth move on up, and see the MVP giving you that nice smooth arrow in both directions. Pound dollar, checking that out. We got that pound dollar is sort of oscillating right on over here, and just didn't do a whole lot in the evening. Didn't get a lot of opportunities. Got like one little pop there, but not a whole lot happening in the evening time trades. Looking at the Dow, as of right now, we had a good move. It was up. It went in. It filled in that gap. And ran on down, has been trying to fill in the gap ever since the market opened on the upside, has not been able to fill it yet, but it did come down, moved a deviation from high to low, bounced right off that, basically went up 0.3 down to 0.7, bounced on off that, has not yet touched settlement, but been working right around it enough to say, hey, expect choppiness and use caution. We'll get on over at the Russell. We had a nice little diagnostic move to the downside, turned around, gave a MVP reversal going long right there, running on up all the way up from negative 0.5 pretty much up to 0.5, giving you a nice solid deviation move, and then chopping basically since the market opened. So just had a little bit of time there. First 10 minutes was really the big, easy money. We got quite a U.S. session and some nice moves, though, during the Euro session over on the dollar index, where it moved on down. Hasn't done a whole lot since the open of the U.S. session. Checking out the DAX and looking in a little more detail, had just good movements. DAX has been just fantastic to trade lately. And I don't know if you do trade the DAX, but if you don't, you might want to check into it. Has a nice tick size value, and just one of the smoother movers, and can give you some great, especially early AM traders out there. And but ran on down to one deviation. You can also trade the DAX over on Nadex all the way from 3 a.m. till 4 p.m. each day. We got the NASDAQ right here. We were running on down early this morning, turned around, fought them, boom, popped right on back up, bouncing right on off the settlement for a move on back up. And we had nice elite reversal, clean move, just moving on down, pop, hits that, move down, and again, check it out from one deviation there, high to low. So we've hit a deviation move. We're using a lot of caution at this point. Probably not the best time to hop on in and go short. We're really looking for a long, and we get that confirmation right here at the MVP. Boom, it goes long, runs on up because it's the MVP reversal long right off the trade and runs right back up to settlement for a solid $1+ move. That's a $1,000 move in oil. A fantastic move. We got people saying, you got, depending upon who you pull up, markets are nearing a bottom. Everybody's going to say that the day after the market had a massive run, massive surge. And, what's really going to happen, I guess, of course, we'll see. What did happen is we had a massive sell-off, massive volatility. We had a big short squeeze on Friday, pushed a lot of the shorts out of the market. But one of the funds came in because this is like a week where, I want to say like 70% or whatever. There's just a massive amount of earnings coming out this week. This is like the prime earnings week. We had IBM this morning not doing well. That's where you see a lot of the indices and stuff moving down. We got Apple's coming out after the close, obviously expecting some really good sells on the iPhone 6 and 6 Plus or whatever. And because, they haven't been able to keep up with production and everything else. There's been so much demand. But that is an expectation already, okay? So it shouldn't mean a whole lot. I would not be surprised to see it pop up and then come on back down. We'll see. But really, after Apple's done, then, that to me, that's the big thing that's to sort of hold the markets, in like a relaxed mode for a good chunk of the day. But just be very, very aware of the Apple earnings release. It comes out after the markets close. It's like 4:30, okay? But I'll be paying attention to that one, and I'm sure you should too. But, again, after that one's out of the way, that's the big holdup. And we got other stuff coming out. We got Microsoft. We got Intel. There's a ton of companies coming out this week. And if those retail sales look bad, which we saw bad retail sales numbers come out last week, IBM had disappointing sales. And, Apple is usually one of those ones that's really done well no matter what. But if we start seeing other companies reporting a lot of these negative retail sales and we keep staying below or bust below 200-day moving average, depending upon what index you're looking at, then if they can't come back above that and keep going, we'll take a look at a couple of those death crosses there and then look out below. So I would not be trying to call a bottom yet. I'd be letting this earnings week play itself out. And if I start seeing some negative reports come out, then watch out below. Let's see here. We got let me repeat myself one more time, right? We got the European stocks really hitting that thud, not doing very well. And also a lot of people, don't know, but yesterday was the anniversary there of the Black Friday. And, of course, it was on, or like Monday, it was on Sunday there. So, and today's looking okay. So that's a good thing so far in a comparison. We got a little bit of short-term bullishness on the euro dollar itself, though, but they're just prime and pumped and ready for recession 2.0 or 3.0 or 4.0, whatever number they're on right now. And it just looks really bad over there, and that will drag on the U.S. economy. So not only do we have the retail sales in the U.S., how much are people spending, but we also have as negative news continues to come out of Europe. Let's see, we got E-mini liquidity going way down. I thought that was sort of interesting. So one of the lower E-mini liquidity periods during this time. We are seeing options liquidity overall, though, is increasing quite a bit. We also checking in, going in. We got gold moving on back up higher, consolidating. Buyers trying to get and maintain control. Natural gas plunging down. Let's take a look at natural gas. I want to bring that chart on up over here, and we'll take a look at that one. Give me 1 second. Move it on. Get a different formatted chart. And bring that over here, and we'll take a little look at natural gas. It is just a massive move today, 2.5%. Of course, it has those massive moves on a pretty consistent basis. But anyways, looking on here, moving on down, and it was a one deviation move, but it was just like I said, it was just a big move. And it's let's see, on the low side of things, let me go over here and I'll pull up a daily review. Let me pull one other chart so I don't mess with that one. I'm always watching it. There we go. We had GE and YM up earlier. We can go on over here. You can see IBM as it tanked down, it's dragged down over there on the Dow. But let's go in and look at natural gas. And you see how it's pushing down and making a new low right there. Let's go back a little bit further. Let's try a week view. And there we go. So really looks like we're making a low on the 2013, basically the lowest level we've had on natural gas for 2014. And gapping on down there over the weekend, and still looks like it may keep going down. It's coming on down right here. We're coming down to, I guess, what do we got? We broke through the low of the year. The next low we're looking at on pretty high volume. Let's see here. That was not high volume. I'm trying to find a high volume low, at least in comparison. It's like right around the 3.2 range. So we could be easily moving on back down to that very, very soon. All right. But just some big moves in natural gas. Let's see, going on in. Let's see, I saw a very cool announcement coming out on the news front. I'll be posting some more stuff out about this. I knew about it a couple weeks ago. Finally, they got it all publicly posted so we can talk about it. But we got 20-minute Nadex binaries coming out in November. They're going to be first releasing them right the first week in November. They'll be released on the U.S. indices to begin with. Obviously, during the daytime, I think they'll start like at 10 a.m. They go to 4 o'clock. And pretty smart how they made them. They're very narrow. Like I said, like 1 point wide, like on Russell, and then they go down to like 0.7 during the lunchtime hours. Be 9 strikes. And I'll get you more details and all that. I've already read through all the specs and all the paperwork and everything, see how they filed everything. But I'm just excited. It's going to basically provide a lot of really good opportunities on trading indices. And, sort of like everything else, they try it on one market, then they expand it out to other markets over time as demand picks up. And I think there'll be a lot of demand on this. With them recently opening up to the U.S. and to Canada, U.S. territories, and Canada and Mexico. And then adding in this ought to bring a lot of people who have been trying to trade overseas binaries, which aren't regulated, here to the U.S. All right, we'll be back right after this. All right, folks, so I'm back here to the Diagnostic Trading Hour. And so as we're going through everything, catching up on where the markets are, first thing, let's go ahead. Like I said, they get the new Nadex binaries coming out. And so there'll be 20 minutes. And so they'll start, I guess, at 9:40, just right there after the market open. And then they'll have one every 20 minutes. They'll set them at 9 strikes. Again, this is on the U.S. indices. And eventually, of course, rolling it out to other markets at other times of the day. And just giving a lot of different ones. And the biggest thing I love, not only did I like the strike lists, I thought they were appropriate, I love how they narrowed the strikes down during lunchtime. So they're really taking an active focus on the intra-hour trades, which is basically, I'd call these intra-hours. And that's my suggestion. I'm going to send them to post it whenever they build it in their platform there. We'll see if they take it. But anyway, so 20 minutes coming soon. So on that, basically that's like an EPC trade, having EPC ETCs. Can do those all the time. You got spike strikers that will fall right in line with that. You can go in there and, there's a lot of different ways to trade it. But that'd be spike strikers and EPCs, ETCs would be the first way to do it. Just throw 20-minute ranges on there, and you'll be good to go. We ought to see those coming up probably next week in demo is my guess. So we ought to see them. Usually we get to see them in the demo and a week early. So hopefully they'll do that. My big question is, are they going to do the bid-offer spreads? Are they going to be like the intradays? Are they going to be narrow? Are they going to be wider? Hopefully they're not any wider. And then are they going to set the strikes like right there just before expiration? So hopefully they will, and if they do, then that'll provide some great opportunities. Just a review for if you don't know what EPC trade is. Basically an Expiration Premium Collection trade, and there is a lot of premium collection possibilities with where the S&P has been at. We can go down, we can look and see if there is anything right now. But let's say we had a buy or a sell on gold. Right now, these are wider, right? So they're like 4 points wide. We go look at gold. It's sitting at what right now? 1245.5. So an example of an EPC would be to go in and buy, say, these 10 contracts here at $4, expecting there might be a move of 5 ticks here in the next 5 minutes, 3 minutes. That's not a massive move, something like that you can do. And there's a lot of different ways to do them. Okay, as you're going in, as you're trading them. So you can go up here. You could also go down to 1243s. It'd have to expire above the contract. So that's just one example of how you can do it. And let me see here. So anyway, so if that comes up and the market moves, say that point, or maybe it's 10 ticks. You know, it's depending on exactly where you buy it at, what price it is at the time that you buy it at. Maybe it's 10 ticks, maybe it's 5 ticks, whatever. Then, you know, you can go in and basically make a very potentially large profit or not, depending on if it's like an ETC or an EPC. Put a little note there on my trade. But an ETC is when you're buying a in the money binary, okay? So if I bought a in the money binary, that'd be an EPC. Or and then if I bought an out of the money binary, that would be an ETC. Okay? So an in the money binary, EPC, out of the money binary, ETC. Basically is how that would work. And you'll see like contracts fall off there. There's just random quotes. Now, what quotes are left? What are we seeing? This is sort of an interesting thing to bring up and show. Basically, the quotes you're seeing that are left that may be on the board there, it could be static quotes. They could be other traders' quotes, people trying to get out of trades. There's a lot of different things that they could be. And here we go. But there in those last few minutes, you'll just see a few different things going up. And I mean, that's a really short example of a trade. But if you go to your risk $4, I mean, you could be wrong over, you know, basically you could be wrong 24 times out of 25, and you could be break even. Or, you know, and that's if you're 24 out of 25 and no move happened. So now you have to be able to, you know, when you do it out of the money, you have to expect to have a lower percentage on win ratio. But your payout is so much higher, it can more than balance it out. But it's going in and it's focusing like in the last 5, 10, 15. In this case, we could be doing 20 minutes and doing very short-term scalp trades. An ETC trade says, hey, it's going to, you know, move a certain amount of money, certain amount of, you know, points. Catch up when we get back right after this. All right, folks, we're going back here to the Diagnostic Trading Hour. We're trying to cover the EPCs and ETCs there in the last segment. And what I was talking about is with the new binaries coming out on November 3rd on Nadex with the 20-minute expirations, then you don't have to wait till the end of an hour to do an ETC or EPC. Again, ETC is Expiration Trend Collection. EPC is Expiration Premium Collection. And an Expiration Trend Collection is using an out-of-the-money binary and entering that. It's a very close, very cheap out-of-the-money binary close to expiration. Expiration Premium Collection is somewhat, you know, basically as far away as possible in the money binary, entering that trade in the last 20 minutes before expiration. And just, you know, there's not always going to be a trade set up. So, of course, that's sort of, you know, that's obvious within itself. But you just look at it. You can look at, there's a lot of ways to do it. The big thing is you need something like expected volume to help you on it. So if you're going in, and let me open up a chart here. We'll go in and we'll go to, what are we going to do? We'll do just, we'll do the Dow, just for the heck of it. Let me open that. I'm just going to use time-based for the moment, but you can also, I prefer to do it on diagnostic bars, like smaller tick-sized diagnostic bars. But if we go in here, and I'll use, let's see, give me 1 minute, just so I can get all this put together. Open up the chart for you. And there we go. Oh, got an error there. Hold on here. And put that back on. Okay. So, you know, going into the end of an hour, and you could look at, ideally, I mean, it's even in the last 5 minutes. So you don't even, it doesn't have to even be a 20-minute trade. But you just look at the direction of bar closes and go, hey, if it breaks the high or the low, then I have a potential trade, you know, as long as it does so with expected volume. And, you know, like in an ETC, you could go in for like 4 or 5. You could hold it if you wanted to. What I usually do, and is I'll go in the last few minutes, and I will try to get in the trade, like I'll go in like at 4 and get out at 43, or I'll get in at 4 and get out at 10 on the trade. So there's a lot of different ways you can do it, but basically I like to layer out of my profits on ETCs. So if you think about it, let's say you risk $20, okay, and you did 2 contracts. So if I risk $20 and I do 2 contracts and I take profit on 1, okay, it's at 40, then I could leave the other one on until expiration. I've covered my risk, and now I could make $80. I could end up making a $120 profit on a $40 risk. So, nice, massive return. So that's the benefit of the ETCs is it's low risk. You don't have to have any kind of stop loss. And again, ideally, get in the trade, get out of the, part of the position to cover all your risk. And then, now you could let the other one go to expiration. You could set it like take profit at 96. You could set it at 50, 60, 70, 80, whatever you want to do. The big thing is I'd recommend obviously being consistent in that process. An Expiration Premium Collection trade, I'm going to hop in. I'm going to get the deepest in the money binary contract I can get. When it breaks a high or a low, then I'm going to hop in on the trade. I've even went down as far as, going to like 1 and 2 minute bars, just trying to follow that last little bit of trend and see if I can grab it. So like right here, you got the last couple minutes, boom, you buy it, and then it runs on up. Or, it goes south right here, last couple minutes. So these last 2 bars right here, and then it breaks below the low with exceeding volume, and then you sell it right there. And you just rinse and repeat over and over and over again. So, this one goes up, bust the high, you enter, you go long, you have it in the money binary, and it goes into dark zone. So you have to hold on to the thing. It comes back up, and you are profitable on the trade. So it's very simple, but you got to have exceeding volume, whatever it is that you're doing. I mean, there's another one, expires in the money. So there's a 10 o'clock. So how would I do this on a 20-minute binary, just as an example? Well, if I go into the range, then I'll change my ranges to 20 minutes. Okay? I bring that on up. And now it'll actually let you see, versus hourly, actually seeing every 20 minutes of expected movement. And again, you get to take into account the expected move. So we go on right down here. We have 2 minutes. We got 4 minutes left till expiration. It breaks the high. I buy. It expires in the money. It also shows me about how far I could expect the market to move were it to, continue going. Over here, I go sell. I shouldn't expect the market to move at all. So this one, like, if you think about this, if I go right here on the 956, it breaks out before 958 to go long. Well, I could expect it to potentially go back up to, no higher than probably, but back up to this expected range. So I'd want a out of the money binary closer than that. In the money binary, I'm going to want to get it obviously as deep as I can get. But let's go over here to this example, and it breaks to the low with exceeding volume, okay? Well, I don't expect it to go any further. So I shouldn't use an out of the money or even at the money binary. I want to choose a in the money binary, which would have made that trade a profitable trade for you, okay? This one's outside the range. You might just leave it alone. It's not even within the expected movement. It's way out of there, and it's just choppy. It's been choppy almost the entire time. We go over here. We got another one. It goes in. May have expected a big move. Didn't get a big move on that one. In the money, it would have been okay. Out of the money, it depends on if you had to take profit or not. Maybe on that first half like I talked about. If you go up and it takes some profit and you get out and cover the other half, then, hey, you break even on that trade. Right here, we're at the expected move. We don't expect it to go higher. So we do an in the money binary. It expires profitable. Here, we're at the expected move. We don't expect it to go lower. Now, it's hard to tell on this one because it broke the high and the low. I can't tell you what happened first. My guess is it broke the low first and then popped up and came back down just because it opened lower than it closed. We'll go on here. We got this move right here. So it breaks the high. We go long. Again, did it do it on exceeding volume? Yes, it did. Bust on up. So as soon as that volume exceeds, I got it clear to go. Go down here. It doesn't break a higher low. No trade. Go over here. We're outside the range. We're going to leave it alone, and it also doesn't trigger. Go right here. It breaks below the expected volume. Does it. Boom. Goes down. Makes not only a great out of the money, but also an in the money trade. Either one would have worked. We go on over here. We're at the expected range. So if we go in on that trade, we're going to buy it in the money, and it is profitable. We go on over here. It's an inside bar. It doesn't have, that's literally all the trades for today, and that's just today's review. Okay? So again, had them start right there at 10 o'clock. So a very simple 2-minute system using expected volume and expected ranges in order to do the trades. And so that is one of many potential trades you could do, but you need those two pieces. If you don't have those expected ranges, you don't know if in the money or out of the money binary is best. If you don't have exceeding volume, if it's a low volume day, then you got to be really careful, especially on those out of the monies. So that's basically a way to do a combined EPC and ETC trades on this. Now in this case, we're not having to go down to the last like 5, 10, 15 minutes, but again, I still prefer it. Simply because if you go in and look at it, you can control that short, quick movement and, really maximize that trade there. Now, I mean, other possibilities, you could go, well, most of the times it does hit the expected range on one side or the other. Maybe I can do a strangle. Well, if you could pull off a strangle on the binaries at the expected moves every 20 minutes for enough to actually pull out a profit, okay, a decent profit, let's say you could get each side for $15, okay? It wouldn't be huge. I mean, that'd be, well, get out one side at 43. Maybe if it goes to hit the other side, I'd double up. But so that's a strangle possibility. Now, you could also look at a butterfly possibility. Now, a butterfly involves one additional piece, okay? It involves the piece of going in and looking at the close to close to make your, what I call a butterfly net. So if I go over here to expected range, and I change this to 20 minutes, and then I say, you know what, I want to go ahead and look at, instead of the high to low, I want to look at the close to close and click OK. Then I'm able to get an idea of where it might close, how accurate is that, how am I seeing the accuracy of that on the indicator. And I back on up and go, okay, where should the market on average close to? So we got over here at 10 o'clock, it goes down and then pulls back up because I'm pretty much right on that close. This one, it tried to move back up towards it so you can. Why is that important? Why do I care about that close to close? Well, it gives me an idea whenever it goes up and hits that it'll probably come back somewhere, within that close to close range. And if it does, then that maybe lets me know, like, how wide can I make my butterflies? Like on this hour, which is actually normally not 10:20, 10:40, this period. It's not hours anymore. Normally not a super wide range. Okay? So I would have been, a little more cautious. This one's a really wide range. I would have been more cautious about how wide I made it. But this gives you intra-market volatility that should really help. And you determine, like, maybe where you might want to set your strikes for, iron butterflies. Maybe you just leave them alone. So you start off at 10 o'clock. You're like, okay, I'm going to sell one just above and buy one just below. If I can pull that off for $50, I do an iron butterfly. Now, if I can pull it off for 15 or 20, I'm going to do a strangle. So if it's expensive, I'm going to do a butterfly, ideally at a 1-to-1 risk reward. The big benefit of 1-to-1 risk reward is I can leave it alone until expiration. Okay? So the big benefit of 1-to-1 is I can leave it alone until expiration. Now, I can go wider. If I can pull it off maybe at a $30 net credit and get it outside the expected ranges, you'd be surprised how good they can work out, because here's what happens. Is you make about 15 on one side and you lose 30 on one side, so you lose $15 on a $30 profit. So it actually gives you a better total risk reward scenario for a net $15 loss on a $30 profit potential trade. So I can look at going a little bit wider and managing the trade. I can go a little bit narrower and not manage the trade, seeing how many of them do close inside the ranges. If they're incredibly cheap and there's not even a butterfly available on the planet, that's when I'm going to check out those strangles. Can I pull off a strangle where I could be able to get in and out of the trade and actually make a decent amount of money? And the easy thing is just using this simple rule of, are the strikes within the expected range, high to low, on a strangle? And if they are, then can I get in and then take profit, like, say, 46 or 43, or it depends on what the bid-ask spreads are. But we'll just put it neutral, put it at 45, okay? And say we have $10 wide bid-ask spreads. So can I take profit at 45 and buy both the upper and the lower contract And so if I went in and bought the upper one, if I bought it, for 10 and sell it out at 45, if I sold the lower one for 90, buy it back at 55, whatever that price combination is, can I get a decent return on my trade if I took profit whenever it hit it? And again, if it's cheap enough, then I got a strangle. If it's expensive, I got a butterfly. And so if you look at these, boom, pops up. Would it hit take profit? This one, let's just say you could have got them on each hour. So take profit, take profit. This one goes down far enough, you took profit. That one goes up far enough, you took profit. This one goes up far enough, you take profit. This one goes far enough up, you take profit. This one goes far enough down, you take profit. This one might have been close because it didn't quite hit a high or low there. This one hits up high, you take profit. This one hits low, you take profit. This one right there at the end takes profit. This one goes up, hits take profit. This hour takes profit. Over and over and over again, calling those expected ranges every 20 minutes, okay? And doing that, as many hours as you want to sit there and trade it, at least, between 9:40 and 4 p.m. So, great strangle strategy. Obviously an easy, simple take profit strategy. Let's see, let me look at a couple other possibilities. I'm going to go in here and just trying to get some ideas. That I've had a lot of people asking me what are different ways I can trade these. So expected ranges, expected volumes. That would be something you could be looking at. You go over here, you can check out MVP. Maybe you just trade to the direction of the MVP line when it hits. So if we're short, we're going to take it to the short side. That one, let's see. Okay, they start at 940. So it comes over, it flips, boom, we got a long up to that side. We get a long there, not so good. That one, pending. Takes off, goes up, takes off, goes down. So, you could literally do at the money contracts would be another MVP strategy. Just doing at the money for the expiration of 20 minutes. So let's see, how would that have worked? If you just, when you got it, you go in and we'll take that to 9. I'm just trying to give you a variety of ideas here. So 9:40 at 10 a.m. we get a long, we do an at the money. That one would have settled in the money there. This one we get one, it pulls, it's another one. So the second one pulls down that one, doesn't trigger. So, that one probably not as good as the strangles and straddles. I love that. I love random walk. So that's what we've been talking about. All right, we'll be back right after this break. One other thing I've been talking to some other traders about is they've noticed that the spike traders should be good take profit points, and sort of letting you know when to be cautious. Like let's say you're in this downtrend on the MVP on the Dow that happened this morning. It's running down, 7 o'clock, boom, 7:30 we get a volume spike saying, hey, go long. It's not, again, remember, this is an in-the-money trade usually, okay? So you got an in-the-money binary right there. Trade's profitable. Awesome. But what about this MVP short? Well, obviously that was right near the low. We did have one more spike down, and then it said, hey, go on up. And so it gave you a little early warning that the market was ready to turn in the midst of that trend to help you know where you could take profits. So you can use 10-minute volume spikes on MVPs to help you in that process. So just sort of a cool little thing to add on when you're looking at these trades. Look at this one. We got this nice big long run happening right here on the Dow, and then check out what happens. Volume spikes says, hey, go short, and the trade right there is like right there. Market goes flat and turns right back around. Well, hours before we get an MVP, confirmed reversal. So, that's just a little tip for you. If you are using the MVP, using that spike tracker can be a good thing, even on a diagnostic chart, to give you an idea of where the market may be looking to do a little bit of a pullback. All right, let's check out. We had a couple trades this morning. At AM, we had the dollar CAD trade, so I'm going to go ahead and pull that on up for you. And I think I may have hit the wrong button on the chart there. Give me 1 second. We'll get it all loaded up for you. And let's see. Yep. Oh, no, we got it. Okay, good. And so we were looking at this morning, looking at an 8 a.m. to 10 a.m. trade. Still on the dollar CAD. Let me bring up, let's see, the information for you, the release. They had their wholesale sells at 8:30. It was right on par. So no surprise coming out of the trade. And the trade we're looking at specifically was, let me back on up here. Here we go. Going in, we were looking for less than a 30-tick move on the trade. Let's see what we got between 8 right here and 10 right there. 9 ticks. Going on down, we got 16, and going on up, basically got 9. So that's 24 ticks high to low, but only 9 ticks off if you would have got close to that $30. I mean, you could have got it easily on the oscillation if you were legging into your 2 wings there. Could have easily got that $30 fill, but $9. So that would have been if you got the full fill on that $21 profit or 21 tick profit, sorry, on that trade. So it could have been 21 or 210 or 2100, depending upon the size of the contract you're doing. Let's see. We have FOMC member Bao had a little conversation this morning. Told you to be aware of that one. And let's see. Let me bring this on up. German Bubba Monthly came out this morning. Earning coming out. We had IBM came on out there, and we also have Apple coming on out. And what do we got here? Let me add one more piece on my earnings calendar. All right, so we got Apple coming on out, and of course that'll affect the Nasdaq, but it's coming out at 430, 435. Okay, the wire and everything. So do expect some position shifting, some weird, crazy stuff potentially at the end, but market is not going to be open for you to take advantage of that trade. Too bad, right? All right, we'll stay right there. We'll talk about a couple of trades coming up tonight and tomorrow you can be set up for. Oh, we've ran out of time. All right, well, I'll talk to you later. Y'all have a great day. Bye.